Hello and welcome to my channel. It's Trader Sam A, and this is my first video to discuss the markets and open up this blog for myself to, one, hold myself accountable to what I see in the markets overall, two, help somebody else that is also struggling to find their way around and have another set of eyes. Full disclosure, I will say I am an ICT student. I will not be teaching any ICT concepts. I may bring up certain terminologies that has been spoken about already in the free content, but I will say if you are not familiar with the inner circle trader, you will not find any relevancy to the content that I put here. So this is essentially for all ICT students and myself. I'm trying to put myself out there in a way where I analyze the market and I put it out there and in some way gain some credibility and see where we can go from there. So here we go. We can get started. For the most part, I think I'm going to put up a couple of videos a week, and it will be during the times that I trade where I'll be looking at something. I'll record what I'm thinking could potentially happen, and then there will be a recap video that essentially discusses whether what I thought would happen happened or it didn't. I am a Forex trader. I trade the Euro US dollar, Pound US dollar, and Aussie US dollar for the most part. At times I do trade the cross pairs, generally when I know the US dollar isn't going to move. Like here, for example, it's not moving, so I trade the cross pairs. How I get to the cross pairs, obviously I can't talk about it. However, what I can talk about is the trade that I took last week, and a little bit about where I think the markets are going to go. So to get started, and again, I'm trying to keep these videos not too long, just discuss a few things about the markets that I trade, and who knows what this channel will evolve into. Just trying to find a way to put my journaling thoughts in a vlog and see where that takes me in terms of what this could become. So here we go. So dollar index, we are currently in this consolidation. Overall, the market structure is higher highs, therefore dollar should be going up for the most part. What I don't want to see, if in terms of it not being bullish, if it goes below this as a closing candle, I would say that we are probably done making higher highs for the intermediary term. This is essentially a potential market structure break if it especially closes below this order block, which becomes a breaker, as we all know. If it gets below that, then this is on hold and potentially could be looking into getting into this area of things. And if this is just going to hold, it might, take it all the way through. Now, I have a couple of levels drawn out. Unfortunately, I can't discuss anything about it, but it looks like this. And what I think the dollar wants to do, assuming this market structure stays intact, is I want to see the dollar get up to, let's see, if we already made this high, I want to see dollar make another high up to this point. So that takes us almost at this high. But of course, this is not 100%, but this is where I would like to see. If I am this bullish, I don't want to see it come down all the way, because then the probability of it coming up this high is not as high anymore. But for the most part, you know, um, Michael, our good old mentor Michael, talks about the infamous optimal trade entry. So if we're looking at an optimal trade entry, what I want to see is from this low to this high hold. We are still within an area, again, in this red box where price should come up. So if we start going below, we have to revisit what our analysis looks like. So as of right now, I'm bullish, and this is where I think the market's going to go. So that's where we are with that. Again, what kind of trader am I? I'm a day trader. I don't essentially look to take an OTE right here and wait for price to go, you know, one deviation or half a deviation, another full deviation above these highs. This is a likely scenario. You know, price of commodities are rising. Therefore, technically, dollar should be bearish. However, you know, before it does, you know, we know what the market makers want to do. They want to go against the grain. So we could be looking at some level of divergence where the commodities continue to rise and dollar maybe makes higher highs until it doesn't, because where price will go once it comes up in this area, the 98.50 area, I don't know, right? Because then we could be looking at, you know, take out these buy stops over here, take it out, and then crash. So who knows where that's going to happen. I think eventually dollar will come down. I don't know at what point, and based on price action, I think it is still going to remain the way it is right now, where it's bullish price action. So two things I trade are, you know, big range to extend up to another range as part of the algorithmic price theory. Part of that is having rules around it where I don't want to see like an OT from this low to this high or this low to this high. I don't want to see that. I want to see big moves so that we are in a position where this makes another big run. So just to show you what I'm talking about. I don't want to see, like, let's just go from here. This high to this low come down into the OTE here. I don't want to see that. To me, if it starts coming down here, this could be a sell model that we're looking at. And that's not current. We're not there yet. So if, like I said, if it breaks this structure between this low and this high, if it breaks this structure on a closing basis, then I'm looking for reasons to be bearish, at least up to this order block right here. And then we'll see where we go from here. For now, bullish. And again, one thing that I trade outside of the range extension is the buy and sell model, and to me, this looks like a buy model. So you've got accumulation, reaccumulation, reaccumulation, smart money reversal, low risk buy, accumulation, second set of accumulation, ending up potentially above these highs, or could take out these highs or just stop right here. I'm not sure yet. This is where we are. We got to take it one at a time. I don't want to see this make a deeper run. Yeah, so that's what it is. Let's go into euro. Same thing. It's possible that maybe there's some sort of a SMT. This dollar will make a higher high, come above the high, and then go lower. It is very much possible. So it's just based on market structure here. So if I go, oh, nope, wrong one. And perhaps, let's say the next one comes up, or maybe this is it. Maybe it doesn't even go any higher. So let's just assume this is the highest it stays, because technically euro has already made a higher high, whereas the dollar has failed between these two. So, hopefully this is a divergence, and I like where this is closing. Maybe it'll wick on Monday, come down here, and then go up, but that's what I want to see. I don't want to see it any lower. I don't want these lows to be taken out. It could do it, but I just don't want to see anything on a closing basis. So I really want to see what happens on Monday. It would be nice to see Monday opens up, comes down a little bit, and then starts to rally. But, we are in January, first week. Now wouldn't be a good time for range expansion. Might take maybe another week or so. We'll see. If we were to look at what the week looks like, nothing on Monday, 10 a.m. On Tuesday could be a trigger, or Wednesday, 8:30 CPI. So I'm probably looking at the dollar to make its impact more on Wednesday. So we'll see what the market looks like. Yeah, there's some heavy hitters on Wednesday, Thursday, and Friday, 8:30. So yeah, could be a pretty exciting week. It could not be, because it is January and seasonal tendencies this say otherwise. Going back to euro. This looks like a sell model right here, where you got accumulation, reaccumulation, reaccumulation, smart money reversal, low risk sell, accumulation. This whole thing could be an accumulation, reaccumulation, and then boom, this is the final straw, or maybe it goes lower. We don't know, but this is the target that I want to see at this point. Let's see. Yeah, there's a balanced price range in this area. So why am I picking specifically this? Can't tell you, unfortunately, but if you are an ICT student, maybe there are things that you see already. Ideally, I wouldn't even wait to go that far. I would probably want to take out my profits around the 1.10 mark. Yeah. But let's see what happens. This could be a turtle soup. Getting right up to here. So let's say it comes right here, whereas dollar fails to do the same. We are looking at the potential target for where dollar could be, or sorry, euro could be going as part of its sell model. But definitely, again, same thing. I do not want to see this turn into an OT. That would not be what I'm looking for, because my particular model does not allow for this to come back all the way here in order for me to figure out where price is likely going to go. Because if it starts closing above, and again, this one already did, dollar failed to do so, I want to see no further give back ideally. I don't even want to see it come here. I want this really essentially to be the high. So I want this high to be right here, because this actually took out this high, and that would be good to go. This is enough. This is all it needs. And this could be a push towards market thinking, oh, dollar's turning around. It's gonna dollar's turning around. It's gonna fall. So euro should be rallying. I don't want to see that. I am not calling a bottom, and neither is you know who, the one and only. So sticking to that, getting into pound, a little bit trickier. Looks like it wants to do its own thing. If I just look at euro pound for a second, looks super bearish. And if euro pound is bearish, we could be getting a break in symmetry, where we are now looking at a market maker buy model. And how do we figure that out? Let's go right here. What we could have is accumulation, reaccumulation, smart money reversal, low risk sell or buy, low risk buy, accumulation, reaccumulation, take out these highs. That's very possible, but it would go against the narrative of the dollar. But it's possible that if dollar continues to consolidate and euro pound continues to fall, that pound is actually going to be the one that's going to be continuing to rally. So if that's the case, what would I want to see pound do? Let's go into a lower time frame. It's got bullish institutional order flow. I would want to see a short-term low get taken out before we go bullish. Where does that go? I'm not exactly sure yet. Let's see. All the imbalances in this price range here is filled. So, I don't know. It's possible that we might almost have come almost at an end of this buy model, or some sort of heavy accumulation. After coming into this order block right here. Another could be a potential S&P divergence where it makes higher high and then falls, assuming dollar decides to go up. So we'll see. This is a trend line. It could easily break, come down here, and then go up, or just fall with dollar rallying. If dollar consolidates, this could be a really good buy model though, and euro pound continues to fall. So if we just go back to euro pound for a second. we're staying in consolidation here, so this is one of those, you gotta feel it out as the week goes on. If this stays in consolidation and then falls, then you can look at the buy model for pound US. If it's going to be, I don't want to see price take out this breaker. So essentially, this breaker's got to hold in order for price to remain solid. Ideally, don't even make any higher highs. It's already hit it once, hit it twice. If it comes back a third time, I'd be a little bit more skeptical. So maybe, if it starts to fall, even if it comes here, it should be a wick. I don't want it to be a closing candle. So some manipulation could be happening where if we see euro pound start to fall, pound could be a really nice buy model to look into. The other pair that I trade is Aussie. I don't know what Aussie wants to do, because it's already taken out this low here. Also taken out this low. It is a bit of a bearish structure, so if dollar continues to rally like it has been, this could be a good way for it to continue to fall. It's possible that it took out this high, now went back below market structure, and then, this is a high, and then it starts to come down. If it starts making higher highs, then we are looking at a buy model from here to here. Right? So accumulation, reaccumulation, smart money reversal, low risk buy, reaccumulation, and then somewhere around here. So don't want to see that. Looking like in a lower time frame here, we've got a market structure break. Probably looking at this order block right here to come to, and go from there. Let's see if that's a good one, right? Is there any Aussie news? Didn't look like it. Looks like it was all US. Yeah, there's nothing in Aussie, so oops. We're gonna stay in consolidation, so I don't really expect this to make a low anytime soon. Looks like it's consolidating to some extent. Okay, so last thing that I wanted to say was a trade that I took this week, and then that's the end of the video. It's not here, so I'm gonna put it in. So essentially I did a relative strength analysis. If you know what that is, it's part of the ICT mentorship. And I determined that even though, pound CAD, we're in a crazy consolidated range. This is a 2-day chart, and we're already between this high and this low, so I'm not trying to predict where it's going to go on a high level. So what I saw, let's see. So this is what I saw. This breaker right here. So essentially, why is this a breaker? You can take it as a mitigation block because it failed to make a higher high, but I call this a breaker because the bodies of the candle made a higher high and then it fell. So it's coming back here, and again, I'm not saying that it's going to come to this breaker and going to make a lower low. When it hit this breaker, and I'm just going to put this right here. Not sure why my shift control button isn't working, but it's super annoying when it sometimes does that. So I'm just going to have to guesstimate that this is a straight line. So it came into this breaker this week. Looks like it says Friday, Thursday, pretty much Thursday. So I basically took a short trade that happened right here, and I'll show you what that is. So essentially I took the market in as high, high, made a higher high, and then market broke down. What did it break down? Right here. This breaker came to it, went below it, closed below it, which is important right here. Then we look to see what would happen. So this was around 11 o'clock. Saw this come down. I took the trade pretty much on this 10 o'clock. I believe at first, and let me see if I can remember what happened looking at my journal. Yeah, so when I saw it come down here and broke, I took an OTE right here, and then I saw it start to come down. When it came down, I lowered my stop. So here's what happened. Took an optimal trade entry. Right here. When I saw it make a lower low, broke this whole thing down. If it was going to go higher, it didn't have to go through all these lows. So when it broke it, came back here, saw an imbalance, propulsion block right here, and it started to come down. I wanted price to at least come into this place right here, or below this low, because I wanted to see another break in structure, which would be right here. So what ended up happening instead was on January 6th, what day was that? Let's see. On Thursday, I saw it come down, and then I tried to take that trade in London session right here. So I'll show you exactly where I took the trade. Took the trade at this candle, put it at above this high, and I wanted it to come down here. That was my trade. But what ended up happening was, when it came down, I had a really tight trailing stop and I went to sleep. Came back in London lunch and took me out. And I was like, oh man, now what? Is this wrong? What's happening? You know, I started having doubts about, hey, maybe this is another range expansion going towards over there. But I trusted this closing candle, and it went below the closing of the breaker on a closing basis. So I stayed trusted. So when this came back to me in London close, I did take it again, and then I went another optimal trade entry right here. Get rid of this one. This was my optimal trade entry. I probably entered here during New York session. Yeah, actually I did, now that I remember it. I took it at 9:15 during New York session, but it was London close, made a higher high. I got a little nervous because my stop was right above this high. So I'll show you where my next trade was. Pretty much took it right here. My stop was right here. And essentially I had my first target to come down back here, make a lower low, and then come back into this one, 0.5, but I tried to take out this low right here, so I made a little bit there, and that was the end of that for the trade on January 6th until the next day at 12. Pretty good trade, if I do say so myself. I did not take another trade here, although there was an opportunity. I did not take it, so not bad. So that was the first trade I took. And then the next day, end of day started consolidating, and then the next day it messed around a little bit more again. So what I did, what I like to look for in trades is range expansion. So I went from here and I wanted to see price come back here. So what I did was I put my stop loss right below here. Like, I took partial profits along the way, but my stop loss was right here. So I did not want to see price come back into this breaker because it already did all the work right here. So I tried to, and again, this is something where I got stopped out at, try to take an OTE trade. Right around, let's see, here, yeah, 3 in the morning. And I kept my stop loss right here, because in case it did want to come up, and it did, thankfully. Generally, I would keep the stop loss here, but because I had positions here, and I worked out my risk so that even if it comes back here, takes out my stop, I'd be at a break even from what I'd already profited through this run. So I kept, I took a smaller position here, and I held on to it, and I held it all the way until the final target, which is a full deviation of this 2 range. So which it ended up doing. I think I took it out early because it was end of Friday, but basically what ended up happening was my first target that I had was taken in during the non-farm payroll. And then after non-farm payroll happened, I was just watching the market at 9:30. It came in. I took another position right here because the position I took here was already taken out here. And I had my final target that I took from here still sitting here. So I took one more small position and I put my stop loss right here. So just to show you, that was the first trade. Then I took another optimal trade entry from this low, this high to this low. Basically entered again, same area right here. Put my stop loss right above here. And I tried to get it again. I think I took it right below this low right here. So 3 trades on the same pair. Why did I take this trade? Why did I want this to come down? Eventually, I think price is going to come down here. I didn't want to hold for it. It was Friday. I just wanted to be out of it. So I was pretty much done. Um, so that's where we were. And then there was positions I held from here all the way till here as well. So um, thankfully I took just in the nick of time. I don't think I even let it come here. I probably took it most of it out like while it was chilling over here. So those are my trades. It's right now a 35-minute video. So moving forward, I'm gonna talk about during the sessions that I get into, generally the um, New York markets. I'm gonna sort of talk about what I see, probably pause it, and then later in the day I'll record again and discuss what happened, whether I was right or wrong. This was a good week. This was, again, the range expansion that I like to see without price having to come all the way. So let me get rid of these. I don't actually use the optimal trade entry myself. I'm just trying to use the free concepts. But I didn't want to see price come all the way here. I didn't want to see it come to this breaker, and I think I mentioned that already. So this was my stop loss for this trade. When I entered here again, I put it here because I could allow the risk for it to do so. Thankfully, it gave me the profit where I wanted here because optimal trade entry 1.5 deviation. And then I took it again after non-farm payroll, and that was the trade I took. And again, this was such a low trade that it wasn't about the money. It was like a price action study type of thing. So that was my trade. I think it's going to come down here. And again, I don't necessarily trade pound CAD. I just happen to, I do a couple of things where I try to see which one's making higher highs, which one's not, and see which one's strong, which one's weak. And I saw that CAD was making a push in strength, and therefore I saw. And then when I saw the sell model, again, you guys got to see the sell model: accumulation, reaccumulation, smart money reversal, low risk sell, accumulation, probably the second level of accumulation, and we're probably getting the sell model completed right here. So that's the move, that's what I saw, and that's what I have so far. It's my first video. Hope you like it. Looking forward to doing many more. Cheers.